Have you ever wondered how a single statement can send ripples across the global economy? Today, we delve into the chronicle of recent economic events, starting with Jerome Powell, the chairman of the Federal Reserve, and his statements regarding inflation and interest rates. First, let's rewind back to when Powell expressed concerns about high inflation levels and the Federal Reserve's lack of confidence in inflation progress. He emphasized the commitment to the 2% inflation target, but noted that recent data has shown a slowdown in inflation progress. Powell acknowledged that inflation this year is higher than the Fed's projections, partly due to strong consumer spending despite high interest rates. The economic outlook, Powell shared, is uncertain, with the Federal Reserve focusing on inflation risks. Powell expects inflation to cool down, but is less confident about it. The Federal Reserve faces challenges in raising interest rates back, as it requires convincing evidence that current rates are not tight enough to bring inflation down to 2%. In response to Powell's statements, the financial markets reacted dramatically. Stock markets plummeted as Powell signaled a strong stance on fighting inflation, leading to significant market declines. The Dow fell by 4.2% for the week, with the S&P 500 and NASDAQ also experiencing losses. Powell's comments on potential interest rate hikes and the need to control inflation caused investor concerns, resulting in sharp drops in stock indices. Then, in a twist of events, Powell spoke at a panel discussion, emphasizing the importance of central bank independence and the necessity of implementing unpopular measures to bring down inflation. While U.S. inflation rates have been decreasing, the Eurozone and the U.K. continue to face high inflation levels. Central banks globally are tightening monetary policy to combat inflation. The Federal Reserve remains cautious about rate hikes, with the possibility of a 0.25 percentage point increase in February. To summarize the key points discussed, Powell expressed concerns about high inflation levels and the challenges in raising interest rates. His statements had a significant impact on the stock markets, causing them to plummet. Although U.S. inflation rates are decreasing, other regions continue to face high inflation levels. The Federal Reserve remains cautious about rate hikes, and the economic outlook remains uncertain. In the world of economics, a single statement can have far-reaching effects. And, as Powell's words have shown, the role of the Federal Reserve and its policies are integral to the global economy's health.